to start discussion of the next chapter, which is really asking the most basic question there is. Question that we've been pretending to know the answer to from day one, and that is, what is income? What is income? How do we define income? Because remember, we need that in order to get to taxable income. What is income? And like many things in life, you quickly realize that the answer to this question will depend on the perspective you're coming from. So for example, pure, true definition of income. What is it? Whatever you earn? Money. Money is income. Wow. What if I tell you, remember it's an old movie with Tom Cruise, The Firm? Remember that movie? Anybody watched it? Remember when he signed the contract to work for them, they gave him a nice brand new car. It's not money, it's car. Is that still income? Do you care if I give you $50,000 in compensation and you really want a car, you go out and you buy a car? So if I give you $50,000 cash or whatever, check, you pay taxes because it's income. But if I give you a car and you don't have to buy anything, no income, that's it? What if you never take it to a job? You just ride around with your girlfriend there. And you take a train to go to work. It's increase in wealth. Okay, that's interesting. So I have a question for you. Are you ready? You have a house which you bought for $100,000. And now, at the end of the year, it's worth $500,000. Went up by $400,000. Question. Did you make any money? Do you have any income? It has to be constant stream of revenues. Let's forget about everything that you know. Let's forget about taxes. Simple question. House goes up in value. Did you become wealthier? All right, this is a very important point, my friends. You're in business school. If you're going to come out with any knowledge of anything whatsoever, you need to know when you're becoming wealthier. Otherwise, we're all in trouble here. Do you guys agree? So I have a secret that I'd like to share with you. If the value of what you have goes up in value, you're becoming wealthier. It's that simple. Yeah, I know our parents, grandparents, unless it's money under the mattress, it's not money. No, it is. Okay? I remember this reminds me, there was a show, Who Wants to Marry a Millionaire, some time ago. And so you had to be a millionaire to qualify for the show. And I remember there was whatever show and they got married. Of course, you know, they fell in love immediately. Who wouldn't? And then like half a year later, there's a divorce. Shocker. And they're interviewing this young lady, and they go, so what happened? You were so in love, you were crying on the stage, you met the love of your life. And she's like, well, we got married, and then it turns out he was broke. Well, what do you mean he was broke? He had no money to spend on me. What do you mean? Didn't he have to qualify to be a millionaire to be on the show? Yeah, he had a house, and he had a second house. And both were over $1 million. but he has no money to spend on me in restaurants and stuff and go anyplace. So, wealth is the value of what you have. Let's be clear with this. Okay? Why do you think people jump out of the windows when the stock market moves? They didn't sell anything yet. It's just that their wealth just goes up and down. Okay? So, you're right. If we're talking about pure definitional wealth, and pure definition of income, I should say, it's really change in wealth during the year, right? Which is change in fair market value of what you own. And then plus or minus consumption. In other words, you know, if you made some money but you ate it, you don't have the money anymore, well, you still made money because you just consumed it, right? So, economic perspective says, you know, the true income is change in wealth plus or minus consumption. Question for you, is this what we do for taxes when we figure out your taxable income? All right, what's your change in wealth and how much did you eat this year? That's a true, pure definition of income. Why don't we do it for tax purposes? It has to be realized. Why? Why not just, hey, show me what you own. Show me the change in value of your house. Show me the change of your, I don't know, diamond ring value, gold. That would be true. Why do I have to wait for anything else? What's the problem? How can you pay if it's not legal? Answer, who cares? There's going to be so many situations where people are going to have no money. The government says, well, borrow. Your house went up in value, what can you do? Go get a loan against it, right? Collateralize it. Government doesn't care whether you have money or not. Did you see anywhere in this tax formula, do you have the money? You know, taxable income. And the next line, do you have the money to pay us? No. Government doesn't care. So, why not just go with the pure definition? We don't follow it, right? It's not here, change in wealth. So why not? What's the problem? Come on, guys. It's too complicated. It's impractical. We're going to have to make each person value all their assets, and then who's going to value them? The person themselves? I don't think it's worth a lot. Oh, okay, so let's make them hire appraisers. Who's going to pay that cost? Whose appraisers? Yours? Mine? Nightmare. So while it is true, pure definition of income, we cannot possibly use it for tax purposes because it's not practical. So that immediately wakes you up because it says, oh, so whatever we're after is not true. Answer, yeah. We have to be practical. What about accounting? You guys are accountants, right? What are you after? What drives your definition of taxable or whatever, tax income, net income for the year? Are you after pure, true change in company's wealth? No. In fact, what's one word that defines everything that you do and how you do and why you do it in accounting? One word. Revenue? What about expenses? Profit. What about losses? How do you determine profit? How do you determine revenues? When is it in revenue? One word. I remember when I was in law school, we had a professor. She was trying to ask us definition of develop definition of negligence. She goes, "Give me one word." We're like, "Oops." Exactly. It's like, no. Messed up? No. Screwed up? No. She tortures us for like 20 minutes. And then she goes, "Somebody goofed." We're like, "Goofed?" I don't even know what that means. So give me one. Come on, you guys are accountants. You're about to graduate. We're learning all these fundamental things in this class that have nothing to do with this class. We just learn what it is to be wealthy. So what's the driving mechanism? One word. Value. No. Value. Are you after true value in accounting to determine whether there's expense or no. Money. Cash. I'm firing all your professors. What tells you how to derive? What's your guiding light? I mean, you have to have, just like, I don't know, when you run, you got to push off something. You have to have a base. Like, what is it after? I mean, are you happy or not? Well, what do you mean? Happy from what perspective? Money, relation, right? There's got to be some perspective in life. You got to be something from which you're pushing off. Balance? As in what? Like, let's be balanced here. Let's show enough revenues and expenses so they kind of balance out. Transactions. What if there are no transactions? And how do you determine tax base? What if we're talking about accounting? Rules. Well, yeah, everything's about rule, but how do you write rules? Which rules do you use, and how should they be written? What about cash? So my advice, yes, I'll give you a little life advice, then we'll come back to accounting and taxes, yes. Realization. How about unrealized? You know, what? Okay, yeah, were you just stretching? What? Gold? Oh, what's your goal? What's your dream? Well, there is no dream or goal anywhere in ruling of accounting, but you're in the right direction. And let me just share something with you. You know, in life, when you try to figure something out, like what to do, what not, I don't want to preach here, okay? But a lot of you talk to me about your future and stuff, to do or not to do, to be or not to be, where, with whom, and all that stuff. No, I don't get to that type of conversation. So my advice, always, don't just get like bogged down in the forest. Like my son, he's so much into tech world right now. He just wants to build, and he doesn't know how to like get there. And he comes, okay, I just do this. Like, Daddy, what should I do? I said, stop doing it. Just stop. What do you mean stop? Stop. What should I do? Sit down and just think. Right? Because this is what we kind of sometimes don't do. And I don't blame you, because, you know, as students, we're so swamped. Homework, tests, exams, this. So whatever it is, it doesn't matter. We talk about business, relationships, I don't know, accounting, tax. You always have to, first of all, start, think. It's going to take you much further than doing, believe me. Number one. That's what makes a huge difference between the ultimate success and just doing. Number one. Number two, when you try to figure something out, like, what should I do? Or what will get me there? A lot of you come to me, talk to me, I want to get there. I want to do really this. So what should I do now? Like, should I do this, 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 this? Advice, which will always serve you well, is start at the end. Start at the end, even if you have no clue. But that's already going to be great stuff. Start at the end. So whatever you want to get to, whatever you want to accomplish, start at the end. Pretend you are already there, right? And then once you're there, figure out, okay, what does it take for me to get there? Like, what do these people want? Like, when you meet with your employees, when you meet with your investors, when you meet with your client, what do they want? Not, okay, let me just do all this for them. They may not care about it. What do they want over there? Why do I need to do this? So if you're applying for some scholarship, some private organization, somebody talked to me, well, what can I put? Forget about what you can put. I have no idea. You have no idea, but it doesn't matter. What do they want to see? You don't know? Fine, go find out. Call them. Start at the end, right? So same thing, so we could go on and on forever with these type of conversations. But going back to our immediate conversation with accounting, go at the end. When we try to figure out what drives us as accountants and what drives all these rules, you know, I don't know if I told you, I just flew back. The ACPA had its think tank meeting, you know, and they gathered about 12 people from across the country to try to figure out the future of the profession, you know. And you got to step out of the box. You got to think like, what is the future? You know, where do we want to be? Forget about what we're doing, what works, what doesn't work. So same thing here. Why are we doing what you guys accountants? Why do you do accounting? Why? I mean, to understand the rules, to understand really what drives them, and it's true in any part of your life, but let's stick to you guys. You have to understand, why is it that you do it? So accounting, right? So you prepare financial statements, right? Of the company, right or wrong? Why do you do that? For whom do you do this? For investors. Oh, interesting. Why do investors need it? To make decisions. Oh. So wait a second, we do this not because we like the rules and we like to come up with the rules and the more complicated they are. No, we do what we do because there are people who need it. Who are these people? Investors. Oh, that makes a big difference. They use this information to invest. Interesting question for you, my friends. If we give them wrong information and they invest based on that information, what's going to happen? They're going to sue us. Do you understand this? So now you being smart people, if somebody says, give me the information, but if I rely on this, and if it's wrong, I'm going to sue you. Now, when you define this income from the company, how are you going to define it? Are you going to be like, okay, let's just be balanced. Let's be true change in wealth. No. You're going to be now very what? Specific. Well, you're going to be specific, but determining, should this be counted as income or not? Should this be revenue or not? Should we count expenses or not? At what point? You're going to be what? You're going to be very defensive, no? Wouldn't you be defensive if you know somebody's going to sue you? And when you're defensive about it, every step you make, every decision you make, every rule you write, is going to force you. What's another word for being defensive? Conservative. This is the word that defines everything that you do, and now you also know why. And nobody talks about it. Oh, we have these why conservatism in our practice? Well, because we want to be conservative, because you don't want to argue. Nonsense. You want to be conservative because, again, you want to eat well and what? Sleep well. That's all. That's human nature. So, are we going to be like, okay, let's just, I don't know, let's be careful. Let's show more revenues because the company, no, we want to be conservative. Conservative. So less chances of us getting sued. Less chances of an error. Less chances of overstating it. Now understanding conservatism, would you rather show more income, keeping everything else, or less? Less, Things start making sense to you now? Everything you've been studying for the past few years? Now that you're conservative and you're looking at the expenses, should we recognize this expense or not? I don't know. Should we? Yeah, knowing nothing else. We're never in doubt. Yes. Why? Because we'd rather show more expenses, so less reliability, so we show less income, so maybe less people will invest or whatever. Will sue us less. Do you understand? This is what you're doing. This is your profession. This is the core of it. That's it. Because all the work that you do, I remember I spent a year auditing financial statements of the company, and then at the end of the year, we just give this one paragraph. This is what they paid us millions of dollars for. They don't care about anything in the big scheme of things. The client, they want your opinion that everything is good. But we cannot say everything is good, right? I forget, it's been, 15 years since I've done this, but it was like, in accordance with generally accepted accounting principle. We're not saying it's good, we're not saying it's right. We're saying in accordance with GAAP. What's GAAP? Conservatism. in accordance with our conservative approach, which protects us from you suing us, the balance sheet and income statement of this company is stated what's properly, and then we add, in all material respects, meaning, there could be a billion of losses there, but as long as it's immaterial, I'll tell you some stories about that in my experience. All right? So that's what the guiding line. So in accounting, you guys are not after the truth. You're not true change in wealth, which is pure definition of income. You want to be conservative. Okay? You're welcome. Now, let's talk about taxes. In taxes, are we after true change in wealth? Oh, come on, come here, sweetheart. So, we're not. We don't care what happens to change in wealth. Are we being conservative in tax world? Wait. I'd rather you underestimate your income and overestimate your expenses. No. So what are we after in taxes? Again, to understand, you got to go back to the end of it. Why are there tax laws in the first place? We need to collect money to pay government's expenses. So understanding that, without taxes, government cannot function. So we have to be practical, right? So we're not going to go nuts and try to make a change in wealth. We cannot be conservative, but we've got to be practical. And whenever possible, fair. But a lot of times through this course, you're going to say, Professor, but that's not fair. And my answer is going to be, and? This class is not about fairness. Because if it was purely about fairness, and you say, my dear, I made this money, but I ate it all, and I don't have any more. The government says, oh, really? So what should we tell all our employees? Say, go home? We don't have money for you? So we got to be practical in taxes. And therefore, us being practical and think now you are a member of a government's think tank, and you got to come out. So how are we going to tax people? How are we going to, at what point? I mean, if they have a house, went up in value, but we can't tax them, it's not practical. So when are we going to tax them? When there is a transaction with third party. And that's, my friend, is a definition of realization concept. The government said, the term is just, we came out, okay, let's call it realize, whatever. But the government says, we're going to tax people once there is some independent way for us to determine that they actually made money and how much. When they deal with third people. So you work, you get compensation, okay, that's how much you get, right? W-2, you get form. You sell something, you make money. If it's with third party, okay, now we're going to tax you. So please write down, realization takes place, which is taxable event. Realization takes place when there is a transaction with third party subsequent to which there is a substantial change in property rights. Just write it down, I'll explain. Subsequent to which there is a substantial change in property rights. Property rights, substantial change. Which really means, it used to be mine, now it's yours. I sold you a house, change in property rights. Now the house is yours, your money's mine. You understand? So we're not being practical, we're not being true, we're not being conservative, we're being practical. For the most part. Okay? And that's the realization concept.